Welcome everyone to the Daily Volatility Box Review for August 14th, 2019. We are TOSindicators.com, home of the Volatility Box. To get started today, we'll start by looking at the P&L table first. As you can see, with the Volatility Box today, we had a really nice day and we pulled out more than $7,000 from the marketplace over the course of just 8 trades. All 8 of these trades were winners using the Volatility Box, and we'll look at the charts in just a minute. One thing to call out is we did add a side-by-side comparison for today's activity rather, what would have happened had you used other volatility models like AutoChartist with the same 2 contracts. As you can see, the AutoChartist model performed significantly worse with you losing almost $3,400, a little bit more than that. And this is still a conservative loss in which we've only taken the entries where the volatility box actually triggered an entry on our conservative model. The AutoChartist models do not have a conservative model, and you would have had far many more entries using the AutoChartist model and a lot many more stop outs. And so this number would actually be quite a bit higher, but we've dumbed it down to get as close to an apples to apples comparison as we can get. With that, let's actually dive into the charts for the S&P, the Nasdaq, and the Dow Futures and take a look at the trade setups that took place. We'll start with the S&P Futures. We'll approach this the same way we approach every single morning, where we look at the first 30 minutes of the market open with the aggressive volatility box, and we look to see whether or not we've breached either side's entry lines. As you can see, we very clearly had here, and that was our first sign to switch on over to the conservative volatility box. Once we switch on over, we look for the same exact process. We look to see whether or not we breached either side of the entry lines. If we did, then that's our sign to be cautious, either sit on our hands or wait and observe for price action to tell us that we're respecting the volatility models before participating in the marketplace. And that's exactly what we did. As you can see, the volatility box was contained even in the first hour within the volatility box, and we barely penetrated the entry lines. And the price action over the next few hours, we essentially stayed well within. The same story is true with the Dow Futures, where you'll see once again, we penetrated the entry line, but that was just with the wick, and for the next few hours we stayed within the volatility models. And the same thing is true with the Nasdaq futures. Actually not true with the Nasdaq futures, where we didn't even penetrate the entry lines, and we knew right off the bat what to expect in terms of volatility. We knew the Nasdaq was respecting the volatility models quite a bit more, and as a result may give us fewer entries as well, since we weren't really at the edge too often. Therefore, we had only the one entry in the Nasdaq futures, and we saw that the S&P and the Dow were a little bit more towards the edge, where they gave us a few other opportunities. The Russell, on the other hand, gave us absolutely zero opportunities for the entire day, and so we ended up skipping that entirely. So let's take a look at the S&P futures and specifically the trades that took place or set up. Our first trade was a long, where our stop was right outside of the volatility box, and our first target rather, was what we risked, which was 6 points, and our second target was at the entry line, which was also hit for another 13 points. As we hit that target, we were triggered into our second trade on the S&P futures, which was a short, and our stop was once again right outside of the volatility box. Here we risked 7 points to try and make 7 points, which was actually hit right there. And our second target, which was at the target line, was also hit. So on both of these trades, we hit our T1 and our T2. The final trade that set up in the S&P futures was towards the end with the market close, where we fell right into the volatility box right here. Let me pull the charts up so I can move the targets. So our loss was our stop loss rather, was outside of the clouds, and our first target, which was 6.5 points, was hit right here with this tweet bomb, right here with this tweet. And then we tried to go for our second target line, which was not actually hit, and so our second contract, 2, was closed out. Now moving on to the Nasdaq futures. The Nasdaq futures, as we saw earlier, didn't really hit our edges, and so we knew that anytime we actually did penetrate the edge here, that was a really good trade opportunity. As you can see, we triggered a short right here. Whoops, let me change that. Our short triggered right here with our stop right outside of the volatility clouds. With this, we risked 25 points on the Nasdaq futures, with our first target being 25 points, and our second target being the entry line, which was another 25 points for a total of 50 points. As you can see, both targets were hit, and the Nasdaq trade was also a winner. Finally, let's move on to the Dow, which gave us the most opportunities. So once again, our entry was right here, where our stop was right outside of the volatility box. We risked 70 points with the first initial target of 70 points, and our second target was a target line, which represented 102 points. Once again, both of these were hit successfully. With our second target being hit, we also triggered into a short, very similar to the S&P futures, with our stop right outside of the volatility box, this time 65 points away, and our first target 65 points away, and our second target was represented by our target line, which was, I believe, a little further away, 100 some odd points, 101 points, sorry. Our next entry on the Dow futures took place with the long right here, where the Dow futures fell perfectly into our entry line and turned right around. You had an opportunity to get in, and our first target, once again, was what we risked, and our second target was the entry lines. Let me pull up my arrows. So our first target was hit right here, and our second target was hit with the wick of this candle. And finally, our last trade was once again with the action into the close, where the Dow futures fell perfectly into our entry line, giving us a really nice setup, and the tweet took us through our targets. The Volatility Box is our secret tool that lets us consistently profit from the marketplace. Today, we were able to take out more than $7,000 from the market over 8 trades, and each one of these 8 trades gave us a very real edge that led us to an overall winning rate of 100%. That's the power of using volatility numbers that actually work. Our goal is to make the Volatility Box the best trading indicator in your trading arsenal. Get started with the risk-free 30-day trial on our website at tosindicators.com/volatilitybox. Thanks for watching, and we look forward to seeing you next time.